In this video, I'll reveal a simple yet effective scalping strategy that works every single day. The strategy doesn't rely on any indicators or long preparations. It's completely rule-based, and all you need to do is follow a simple 3-step checklist before entering a trade.
Well, that's convenient. If it's 100% rule-based, then doing an automated backtest on it will be beyond easy.
Yeah, I guess. Honestly, it pisses me off so much how these people oversimplify trading. Also the beep boop, I'm a real human AI voice. Like, if you believe in it so much, then put your real voice in your videos, man.
For this strategy, the only thing you need is one candle. Step 1. The first thing you want to do is mark the high and low of the first 4-hour candle that forms during the day. Make sure that the first 4-hour candle has fully closed before marking the range.
Oh man, I'm having PTSD flashbacks to our previous video. If this is another New York breakout, I am going to lose my
Speaking of which, if you're watching this video, make sure you check out our J-Dub Trades Expose afterward.
We move on to step 2, which is the scalping setup. But before that, I want to quickly mention that every single day, I share daily market analysis and trade.
No. Shut up. Bad dog. Don't try and promote your quote-unquote free service. I already know it's just a funnel for whatever crap you're selling.
Get 'em.
Back to step 2. So, after the 4-hour range is identified, we go down to the 5-minute time frame to look for scalp setups. The setup we're looking for is when the 5-minute candle closes outside of the range, either the range high or range low. But again, the key here is the candle must fully close outside, so wicks alone don't count.
I love how he's putting those super arbitrary caveats out there as if it will make a difference.
It's insane.
After the breakout, we then wait for price to re-enter and close back inside the range again. But make sure that all of this happens within the same day as the 4-hour range we marked.
Ah, lovely. An oversimplified mean reversion strategy. How original.
Mean reversion?
What goes up must come down, so people think that you can apply that concept to a chart, forgetting that, it can go up longer than you can stay in drawdown, but whatever, let's just continue.
Okie dokie.
In this example, since price broke the range high, that's a signal to go short. For the stop loss, we place it at the exact high of the breakout move. And for the take profit, aim for at least 2 times the stop loss size. Price came down and hits the profit target.
Wait, there's no way that's it.
What do you mean?
Well, there has to be more to it than this.
Oh, you are severely overestimating monkeys like this that make content.
Now let's look at another example. Here, we're on the Bitcoin chart on the 5-minute time frame, and right here, we've already got the 4-hour range marked out. So that's step 1 done. We can now move to step 2, look for the trade setup. In this example, we can see that price came down and broke below the range low. However, the candle didn't actually close below it, only the wick. That means the setup still isn't valid. But shortly after, we see another breakout, but this time, the candle does close below the range low. So that's the confirmation we needed. Now, we wait for price to re-enter and close back inside the range again. And right here, the candle closes back inside. So that completes step 2. Now we move to step 3, which is our entry. Since price broke the range low and then re-entered, this is a signal to go long. For the stop loss, we place it at the exact low of the breakout move. And for the take profit, we set it at 2 times the size of our stop loss. As you can see here, price moves up and hits the take profit target.
Oh my god. That's actually all there is to it.
Yup.
This is pathetic. How could anyone fall for this?
People new to trading prioritize their desire for easy money over their rational thinking, and can't blame them, honestly.
I guess you're right.
Now keep in mind, as long as we're still within the same trading day as the 4-hour range we marked, we can still take more trades if another valid setup shows up.
Oh, now that makes sense, because these magical lines that you've drawn decide to f*** off and die when the clock hits midnight. Okay, write that down.
I wish I could f*** off and die right now rather than watch this video.
Yeah, if only we were so lucky.
Now that you understand how the overall strategy works, let's take a look at some real trade examples across different markets, so you can see just how well this strategy performs. So,
Whoa. Rewind the tape. Now zoom in. Enhance. In his own example on screen, he's completely ignored this setup, which would have been a loss.
Oh my god, I think you're right.
Step 1. Mark the range. Check. Step 2. Wait for price to close outside the range. Check. Step 3. Wait for price to close back inside the range and open a long. Check.
Yet he didn't.
No, he certainly did not. We'll let it up to the viewers to decide why he conveniently ignored that example.
that's about a 72% win rate on the crypto market, which is extremely impressive considering we only used the very basic version of the strategy. Now, of course, if we want to get a more accurate performance, we would need to backtest using way more than just 7 trades.
Oh, trust me, we will.
He's probably praying to God that beginners will be too lazy to do the backtest, so we'll do it for them.
Now, before we continue, if you're looking for the best trading platform, I really recommend using Blowfin. They're one of the top crypto exchanges out there, and right now, they're giving an exclusive reward just for my viewers. So those are proof that the simple 4-hour range strategy works extremely well, even when traded on different markets. And remember, this was the most basic version of the strategy. We didn't even combine it with other concepts yet. But even then, we still got very solid returns. So this is definitely a strategy you can try out for yourself.
Before we get into the backtest results, data trader, ma'am, miss, whoever you are, if you're watching this, and you probably won't be because we're a brand new channel and people don't care about consumer protection the way they do about your quick false claims, but if you are, listen up. You are a f***ing rat. Before we get into anything, I will say Poppy's feeling a little bit under the weather today, so you'll have to contend with just me. I'm sorry, it is what it is. Alright, let's take a look at whether or not Data Trader's strategy is actually any good. I will show you the results from Bitcoin USD, Euro USD, and Gold USD because he made his video specifically about crypto, Forex, and gold, even though, I mean, gold is Forex, but whatever, that's beside the point. This test has been performed on multiple years worth of data using premium aggregated tick data from Dukas Copy. So if you want to run your own test but you don't know where to, get the data from, then there's that. We're using a framework of $250 risk per trade, following his 1 to 2 risk to reward guideline that he mentioned in the video. However, we will also consider commissions and slippage, so keep that in mind when you look at the results. Before we proceed, please subscribe to our channel. I know consumer protection isn't as interesting as magical strategies with false claims, but we're really trying to make a difference in the trading community and make it a safer space for beginners. So if you care about the truth at all, consider helping us out. Alright, let's get into the first backtest. We will look at Euro USD first. Drum roll, please. I'm not actually going to edit in a drum roll, but just pretend in your head. Wow, well, shocker, right? 831 trades, 28% win rate, which is very far from his 70% win rate or whatever he claimed in the video for Forex specifically. Total return of $62,000, which, as I said, we are using a $250 risk per trade, which ends up being an average of $285 if you count commissions and slippage. Once again, if we can, zoom in on this little section here. If I was a data trader right here, I could show you 15 trades where we made a total of about $2,800, closer to $3,000 actually. But in reality, of course, if I was actually trying to inform beginners instead of trying to mislead them so you would buy my course or sign up for my scam broker, then, I would just show you the actual truth of the matter, which is that this strategy is complete garbage. Let's move on to Gold USD. We have 1,066 trades here, with a win rate closer to 30% at 29.9%. A little bit better, but still nowhere near good enough to make a 1 to 2 risk to reward strategy actually work. That's a negative $51,086. The average loss is a little bit lower. That's just because the commissions on gold are a little bit tighter, or the spreads, I should say specifically. Once again, this is just straight down, straight into the toilet. This is not a good strategy whatsoever. Once again, we could show you this tiny snippet here where, it performed well for a little while, but as I've said before, this is not what you should be looking for. Trading is a long-term game, and this is not long-term profitable. Lastly, let's look at Bitcoin. 947 trades, 27.8% win rate, almost $69,000 in the losses. That's nice at least. And yeah, the graphs look very similar. It's just because it's a lot of trades and, these numbers are evening out on the large scale. And you could see that if you perform this on an account long term, then you will just lose all your money. It's as simple as that.